Northamptonshire County Council last week became the first local authority in almost 20 years to halt all new spending apart from that which it's illegal to stop. The question is, will it be the last? Are some councils their own worst enemy, paying out unnecessarily high interest rates on long-term loans? That claims to be made by councillors and debt campaigners who say mismanagement by dozens of councils means billions being spent on interest payments. Between them, councils in England, Scotland and Wales have bank loans totalling £15 billion. Conservative-controlled Northamptonshire is paying more than 11% on one loan, 22 times the base rate. And it's far from the exception. Our correspondent Andrew Hosken explains more.
So within the den we would have children aged 2 to 4 years.
Angela Prodger is the joint head of the Pengreen Centre for Children and their Families.
So children are able to, what we call is free flow play. Children are able to come from 8 in the morning and stay with us till 6 at night.
Based in Corby in Northamptonshire, Pengreen has provided an extraordinary range of services to families over the past 35 years, ranging from childcare for thousands of children to providing degree courses in childcare for parents. But now Pengreen and 3 other children's centres in Corby are facing cuts of 40% in funding from their crisis-hit local council.
I think the cuts to Corby as a whole will be catastrophic because families do use our provision, the children's centres provision. We've worked hard to build a locality model because we want it to work for the families access the services, and to be told that other children's centres have taken these cuts, therefore Corby needs to take the same level of cuts. For me, that isn't an argument. If you're looking at family need and you're talking about, the cuts won't come to those frontline services where we are really thinking about supporting young children, supporting vulnerable adults, as a model in an integrated centre or as a locality model for children's centres, that's exactly the service that we're offering.
This will be the third funding cut to Pengreen in the last 3 years by the local authority, Northamptonshire County Council. In total, the council will have cut a total of 75% of their funding in that time. Tracy Gallagher, also joint head of Pengreen, said the cuts to the centres risk support for vulnerable families.
We see how the children and families come here and use the provision and use the services, and the vast numbers of families that are actually almost on the cusp of going into statutory involvement, and by coming and having support and working here with us in the centre, that can actually prevent those situations escalating.
Northamptonshire County Council is, for all intents and purposes, essentially bankrupt. It's recently issued a rare 114 notice, a sign of desperation, warning it was unable to set a balanced budget. Tory councillors in charge of the County Council have blamed years of cuts by central government. Austerity, in other words. But opposition Labour councillors say financial mismanagement has played an important role in the crisis that's hit the Pengreen Centre here in Corby. They point to some £150 million worth of loans from the banks. They're called LOBO loans, short for lender option, borrower option.
And what do you make of that interest rate? What is it and how?
It's 11.375%. I mean, that's an enormous interest rate.
I went through the list of the council's 19 LOBO loans with Councillor Bob Scott, leader of the Labour councillors in Northamptonshire. He believes the debts represent very poor value for money.
For our council taxpayers, that's horrendous.
He says the council's paying out twice as much in interest payments, around £6 million, as it should be doing. One loan with HSBC was pegged to an interest rate of more than 11%, about 22 times the current bank base rate.
It's very difficult to ascertain that without going through all the 19 contracts that the County Council have on LOBO loans. But a fairly good estimate, I'm told, is that we're currently paying around £6 million in interest a year. And if we'd have gone through the Public Works Loan Board, that would have been half that, £3 million.
So that's £3 million, you estimate, or has been estimated, is going to the banks every year that could be being paid for towards services?
Yes, and they're services we dearly need, because we've been cutting and cutting as a county council since 2010.
Many LOBO loans were taken out just before the banking crisis of 2008 and the subsequent fall in interest rates. Often the loans are stretched out over 50 to 60 years. Joel Benjamin is a volunteer with the organisation Debt Resistance, which has been investigating Lobo loans for the last 5 years.
It is a substantial amount of money, and obviously, the concern here is that because the lending has occurred from private banks and it's ultra long-term 60, 70-year lending, the repayment cost in terms of interest payments overall is going to be far higher than if the councils have borrowed from government, and obviously they're taking much more risk to do so. There's a far greater risk in terms of off-balance sheet financial liabilities. If the loans go sour, the council has to break the contracts, are subject to crippling exit penalties, which can be greater than kind of 90% of the loan face value.
The biggest Lobo loan borrower in the country, without doubt, is the East London borough of Newham, based here in this long glass office block in London Docklands. At one point, Newham Council had Lobo loans totalling more than £500 million. Newham Council told us that it subsequently restructured more than £230 million of the debt into what it describes as normal fixed-rate loans. A council spokeswoman stressed that the borrowing helped build roads and schools and was never used to fund services. The council is Labour-controlled, with a directly elected Labour mayor, but a number of Labour councillors believe the council's been ripped off by the banks. John Gray is one of them.
We're paying far more than we should do. If we'd taken out different loans from the government, we'd be paying probably about 1-2% interest per year, but we're paying up to 7.6% interest a year. So in effect, we're paying millions of pounds every year to the banks, rather than spending that money on services to our residents.
Council finance experts say that many councils took out Lobo loans after the government decided to reorganise public housing debt. Rob Whiteman is the Chief Executive of the Chartered Institute of Public Finance and Accountancy.
If councils have made bad deals, I think they should not be defensive about that, but actually go to litigation and challenge the banks and say, we think we've been missold, or we think there are bad deals here and we want to change the nature of the deal. I think it's very difficult for banks to defend what may be a demonstrably bad deal. And so I see no reason at all why councils shouldn't try and remedy this through the courts, if that's the right thing to do. Now, I don't want to see councils wasting taxpayers' money on legal action that ultimately doesn't bear fruit. And remember that these loans may be in watertight contracts, and actually the banks may be able to demonstrate to the courts that what's been offered to local authorities are no different to what other parts of the economy have taken out.
Northamptonshire said there were interest rate risks with all forms of borrowing, but that measures had been taken to mitigate them, in line with advice from the Treasury. The Local Government Association, which represents councils, described Lobo loans as a legitimate form of borrowing. But there's little question that as more and more councils get into financial trouble, more and more questions will be asked about how they handle public money.
Andrew